Pavla, good to see you. How you doing, brother? JP, good to see you as well. How you doing? Let's pin the live. Mike, good to see you as well, brother. How you doing? How's things? Artistic, good to see you as well. How you doing? How you been? Just trying to pin the live. There we go. Pin. Okay. This. T, good to see you as well. How you doing? How you been? How's your day, Miles? It was all over the place, but it was busy. How's your day, JP? And okay. Let's do intro, disclaimer, what we're going to talk about tonight's live. By that time, everyone should be tuned in for the first part of the live show. So, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune into this live Monday, Friday, 10 p.m., long time onwards, for the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations, pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is no financial advice, no political advice, and whatever I say is only for entertainment purposes. So, welcome to the CMF Live. If you're new, if you're regular, let's go CMF. Also, on tonight's live show, we're going to be talking about essentially the Fed rate cut situation. We're going to be talking about Tether on tonight's live show, JP Morgan on tonight's live show, and some announcements that are coming out essentially in terms of partnerships for the crypto space, and obviously Ripple news to go through on tonight's live as well. We also do Q&As on this live, which means if you do have any questions, put it down in the comment section. More than happy to help you out. Now, this is episode 410 of the CMF Live. If you have already smashed the like button and the retweet button, thank you so much to everybody who has done that. If you're watching this on X and if you're watching this on YouTube, thanks so much to everyone who's also liked the Essential Live as well. If you haven't CMF members, smash the like button, smash the retweet buttons, and put a comment outside the live as well. Now, let's go inside the comment section before we go through the first news on tonight's live, which is regarding the Fed situation on the topic of rate cuts, yes or no. So let's see what's happening inside the comment section first. We were here. Thank you. Great. Thank you. Let's go, JP. What's up, Miles? What's up, CMF? Good to see you as well, Kerry. How you doing, brother? How you been? Even the Miles of CMF. Joe, good to see you as well. How you doing? What do you think of Ondo, Miles? And have you got a price prediction it could get to? I don't really have a price prediction for Ondo. But what I think about Ondo is it's a genuinely good project that has, expanded quite a lot inside the real world sector. And I think it's going to do fairly well going forward in the sector of real world assets, especially how essentially the founder behind the project, the way he essentially started the project and the way he integrated into essentially, having some sort of connections with BlackRock's IBIT, essentially tokenization projects, and being quite a bit backer of that. I think he's done some great plays. I think the project is quite promising. It could have a very bright future ahead of itself, to be fairly honest. Evening, Miles, and good evening, Miles and CMF. Bull XRB, good to see you as well. How you doing? Good evening, brother Miles. Funky, good to see you as well. How you doing? Miles, what was the reason for the markets turning green? Two factors in play for the reason of markets turning green. One was regarding the Fed situation of a rate cut possibly on the way. Two, the way JP Morgan essentially described the live show. The way JP Morgan described essentially the crypto markets, which is not the live show, described essentially the crypto market space. Little movements today, then pause again pretty much. Hello, brother Miles and CMF commenters. Good to see you as well. How you doing? So let's go for the first news on tonight's live, which is regarding the Fed rate cuts. Crypto surges as essentially Fed eyes a rate cut happening in December. So by the looks of it, we could be possibly going towards some sort of a rate cut. The US Federal Reserve could well be starting a decisive turning point according to the latest data from the CME Fed Watch tool. Markets now estimate an 85% probability of a rate cut as early as December, a rapid development which contrasts with the firmness essentially displayed in recent months. If this scenario is confirmed, it will mark the end of an unprecedented monetary tightening cycle and could disrupt the balance essentially of financial markets. The market ceased essentially to anticipate a significant monetary policy shift. According to the data, the essential rate cut at the FOMC meeting on December 9th and essentially 10th have jumped to 85%, whereas they were still largely minority in the previous weeks. This essentially quick turnaround is fueled by a series of public statements from the Federal Reserve. For example, Christopher Waller, the Fed governor, said, if inflation continues to decline over the coming months, it is quite possible for the Fed will start cutting rates in a few months. Mary Dale, the president of San Francisco Fed, highlighted that moderation essentially in employment could justify a monetary policy easing. Recent labor market indicators also reveal a slowdown in job creations and stabilization of wage growth. This development, combined with essentially controlled inflation, has strengthened market conviction in imminent monetary policy easing. This change in tone is all essentially the more surprising as it sharply contrasts with the caution shown in the recent months by the Fed, which remained focused on the global price of stability. Now the signals essentially aimed at avoiding excessively marked economic weakening, while essentially debate rages forward within the Fed. The crypto market seems to have already decided that a rate cut is on the way. Ethereum is up more than 1% over the last 24 hours with the clear goal of reclaiming $3,000. Bitcoin is up. This movement essentially is not limited excessively to these two digital assets. XRP is up, ADA is up, Solana is up, BNB is up, XLM is up, mainly due to the US Bancorp news as well, still from yesterday. The entire crypto markets benefits from this wave of optimism, so much so that the total capitalization of assets has exceeded $3 trillion so far. Indeed, investors seem to be factoring in their strategies, essentially their hypothesis of their theories of a return to a more favorable liquidity essentially conditions. This phenomenon is essentially accelerated by other macroeconomic factors such as the recent announcements of the Ukraine situation with Russia coming to an end. The Fed now faces the decisive essentially choice for December between signs of economic slowdown and continued essential inflation. The option of monetary easing is gaining ground. Markets led by essential crypto are scrutinizing every statement. One misstep and the moment could break. A rate cut would redraw the current balance, but the final decision remains dependent on the next meeting, which is around essentially between the 9th and 10th of December. Ironically, there's speculation going around that the 8th of December is going to be the sit down for the Clarity Act. And then the 9th and 10th of December is going to be for the Fed. So let's see how that one plays out. But by the looks of it, there's an 85% chance now of a rate cut. Before it was right somewhere down to 35%. Now, that essentially helped the crypto market space to suddenly jump based on speculation of a rate cut. Also, today, the S&P 500 decided to do something that we all think about inside the crypto space, which is about Tether. Whereas, does Tether really have a future, for example, going ahead? For example, Tether, essentially USDT being banned in the EU, essentially also going to be banned in the UK as well, to be fairly honest, due to the UK announcing that, if you are a stablecoin, you have to hold certain assets with British banks just in case of a DPEG situation. So, based on a few countries or a lot of countries going against Tether, the S&P 500 today came out with some interesting information, which was to rank Tether down again. The S&P 500 downgrades USDT's dollar peg rating to the lowest score ever. The S&P 5 Global Ratings has downgraded Tether's USDT to the lowest score on its stablecoin scalability, in terms of essentially questioning the token's ability to maintain its dollar peg. According to the S&P 500, they don't think USDT is able to hold its peg. And at one moment in time, USDT is going to depeg from the US dollars. The weak assessment was due to several factors, including Tether's backing of USDT with essentially higher risk assets such as Bitcoin, gold, loans, and corporate bonds that are subject to higher volatility, according to the S&P Global. The report also read, Bitcoin represents 5.6% of USDT in circulation. exceeding the 3.9% over-capitalization essentially margin associated with capitalization ratio of 103.9%. A decline in price of Bitcoin or the value of other high-risk assets could therefore reduce collateral coverage, which means that USDT would depeg itself from the US dollars. Tether is headquartered also in El Salvador and is essentially regulated according to the National Commission of Digital Assets, the CNAT, which has looser requirements for reserve assets backing stablecoins than the S&P Global does. A lack of sufficient audits or proof of reserve reports will also cited essentially as a core driver of the weak stability rating. Despite this weak rating, the S&P has said 75% of USDT's backing comes from US Treasuries and other short-term financial instruments that are low risk. In a statement to Cointelegraph, Tether essentially classified the report as misleading. Tether was not happy with the S&P Global on the rating they received, saying that it strongly disagrees with the categorization presented in the report, adding that it fails to capture the nature, scale, and macroeconomic importance of digital essentially native money and overlooks data that clearly demonstrates USDT's resilience, transparency, and global utility, which is a load of BS. I'll be very honest. If Tether was essentially a trustworthy, transparent, essentially, corporation, let's just say, then why did Tether create a new version of the USDT for just the United States? Why didn't it? And then the motto was that this new USDT for the United States is going to be starting out with a clean slate. Why? What was wrong with USDT? Is USDT not a clean slate? What's hiding behind USDT? And why did Tether essentially get banned from the EU? Because is it the EU hates Tether? No. Is it because the EU essentially hates digital dollars? No. So why did they accept USDC, not USDT? It's because Tether has a tendency of not showing transparency and then lashes out when people call out on it. The Tether CEO essentially also pushed back against the new rating and the utility of financial ratings agency in general. The classification essentially rating models built for legacy financial institutions, historically led by private institutional investors to invest in their wealth into their companies, that despite being attributed investment grade ratings collapsed. Tether is the 17th largest holder of US Treasuries in the world, with over $112 billion in short-term US government securities. The only reason Tether went that path is that essentially it could have some sort of foundation to stand on when the US comes knocking. The company also accumulated 116 tons of gold and held reserves, which we're going to talk about next, rivaling the reserves of nation states and central banks. So, regarding Tether's gold holdings, Tether emerges as the world's largest gold holder beyond central banks, in a groundbreaking development that's shaking both cryptocurrencies and traditional finance worlds. Tether has astonishingly become the world's largest Tether gold holder outside of central bank institutions. This revelation from the Financial Times marks a pivotal moment for digital asset stability and gold market dynamics. The journey to becoming essentially the primary Tether gold holder represents a streak masterstroke in asset backings. Tether's USDT stablecoin, essentially, which maintains its peg to the US dollar, now boosts unprecedented gold reserves that surpass even the largest private gold holdings worldwide. This move fundamentally strengthens Tether's position in cryptocurrency ecosystems, is what they're suggesting. But what the S&P Global is suggesting is that gold is a foundation, but a better foundation would be bonds. Moreover, essentially this massive gold accumulation provides tangible asset backings that addresses long-standing concerns about stablecoin reserves. The scale of Tether's gold holdings demonstrates a commitment to asset-backed stability that could reshape how investors perceive cryptocurrency safety. The implementation of Tether's position as a dominant Tether gold holder are profound, essentially, for their entire digital asset space. Consider these key benefits, is what they're saying. Enhanced stability for USDT and the broader crypto market space, increased investor confidence in asset-backed cryptocurrencies, reduced volatility through substantial physical asset backings, bridging traditional and digital finance through gold reserves. However, this achievement also represents challenges. The massive gold accumulation raises questions about market corrections and the potential impact of gold, essentially, global gold prices. Regulatory scrutiny may intensify as Tether's influence grows across both digital and traditional asset classes. For cryptocurrency enthusiasts and investors, understanding Tether's role as a leading Tether gold holder provides crucial insights into market stability. This development signals a maturation of cryptocurrency industries where substantial physical assets back digital currencies. The strict accumulation, essentially, of gold reserves positions Tether as more than just a stablecoin issue. It becomes a significant player in global precious metals markets. This dual presence, essentially in digital and physical asset, marks an understood stability mechanism for the entire cryptocurrency ecosystem. Looking forward, Tether's position as a premier Tether gold outside central banks could trigger several developments, and other stablecoin issuers may follow in suit. Increasing competition for physical gold reserves, central banks might reconsider their gold accumulation strategies in response to this new market dynamic. Additionally, this achievement could also accelerate institutional adoption of cryptocurrencies as traditional investors gain confidence in assets backed by digital currencies. The lines between traditional finance and cryptocurrencies continue to blur, creating new opportunities and challenges for market participants. Tether's emergence as the world's largest Tether gold holder beyond central banks represents a watershed moment for cryptocurrency legitimacy and stability. The strict move not only strengthens USDT's position, but also evaluates the entire asset class by demonstrating substantial physical asset backing. The implications extend far beyond Tether's itself, potentially reshaping how both retail and institutional investors perceive cryptocurrency safety and stability. As the lines between traditional and digital finance continue to emerge, Tether's gold accumulation strategy sets a new standard for asset backing cryptocurrencies. From the S&P Global's perspective, Tether is a useless currency that's going to depeg somewhere down the line. From Tether's perspective, they are a brilliant stablecoin that have a firm foot to stand on and a well-built foundation. Very two different, essentially, perspectives. But here's one thing that everybody should know. Wall Street doesn't take advice from Tether, but it does listen to the S&P Global. And when institutions listen to the S&P Global, you can tell where the money is going to be flowing into and essentially whose idea is going to be backed more. Tether's perspective on their own essentially stablecoin or the S&P Global. Also, one other thing that people need to really consider is that Tether is not an American company. And everybody knows how the US reacts. There is no way in hell, let me just put this very clear. It's not possible. There's no way in hell that the #1 digital dollars is going to be a non-American company behind it or non-American foundation behind it. It's just not possible. The #1 digital dollars is going to be backed by an American company. In other words, Ripple and Circle, because they're both American. Therefore, the US is more accepting towards those essentially companies than they would be towards Tether. There's a reason why Tether doesn't operate essentially their headquarters out of the US, operates it out of El Salvador. Ask yourselves, why is Tether operating outside essentially of the US? Why isn't it headquartered in the US? Because the SEC and the OCC would grill Tether. They would go through every single documentation, which is the last thing Tether needs, which is why it's in El Salvador. Because nobody's looking through their documents. So let me just put this, as I said, very clear. The #1 stablecoin, the #1 digital dollars is not going to be in a foreign company in any sort of a way, based out of El Salvador, as if the US is going to let that one go by. I said this for the longest time. Tether's day, somewhere down the line, will be numbered. And other stablecoins, American headquartered stablecoins, will take the rankings. Now, revolutionary Bitcoin ETF expansion is what we're going to talk about next on tonight's live. That is also a very bullish move from the NASDAQ. Before we talk about the NASDAQ, let's go inside the comment section first. This was happening there, and then we go straight into the next news. This was happening inside the comment section. We were... here. Good evening, Brother Miles. I know, can we hear? It's only a matter of time, CMF. I agree, JP. Facts. Hi, Miles and everyone. One love. Good to see you. How you doing? Hello, Miles and CMF. Mickey, good to see you. How you doing? Hi, Miles and CMF. Hope everyone is all good. Ronnie, good to see you, brother. How you doing? This is what I said yesterday. Minute the Clarity Act comes, bye-bye meme coins and bye-bye USDT. I agree 100%. I'm interested on your thoughts on the budget today, Miles, regarding the UK. Wow. The UK introduced their new budgets today, which were absolutely horrendous. And the funny part was it was leaked before essentially it went live on the budget reading. Rachel Reeves is essentially being named the worst person to ever have stepped foot inside of politics, ever. And everybody's counting the days that she essentially decides to resign. Rachel Reeves came into the game, into politics, by saying that she will never raise the taxes. She will never raise the rates. And that she cares about ordinary people. From day one until now, she's lied through her teeth. Every single day, she's thinking about new ways to raise taxes. Did you know in the UK, they said that essentially if you drive an electric car, you don't have to pay ULEZ, you don't have to pay congestion charge to drive into Central. Because you're saving the planet by driving an electric car, is what they told everybody around the world. You know, if you drive an electric car, you're saving the planet. Less carbon dioxide produced. And therefore, you shouldn't pay a fee to drive your electric car in Central because you're saving the planet. Well, 2026 is going to be coming around and they're going to be charging electric car drivers, not just essentially the congestion charge they have to pay going towards Central London, but also they're going to be paying pay per mile. If you drive an electric car in the United Kingdom, you're going to be paying pay per mile. I'm telling you, the day is going to come around where they're going to start charging you for oxygen. And the funny part is what's going around as a rumor is that if you don't pay per mile and when you're driving your electric car, they'll just cut you off and you'll get a fine. Your car just won't work because it's programmed not to work. But yeah, that's what's been introduced in the UK. I mean, there's a $40 billion hole as well. I mean, it's just growing. The UK, in terms of essentially the party that we have going on, but to be fair, no party is good, honestly. People are saying right now in the UK, vote for reform, vote for essentially Conservatives, vote for Tories, vote for the Green Party. It's all the same. There's no difference. Every 4 years, some other party, the same party, will come around and say, and the best part is, for example, the Conservatives, not saying I'm sticking up for any party, to be fairly honest. But the best part is, the funny part is, the Conservative Party will come in the essentially House of Chamber, in the House of Chamber, will come and say the Labour Party is ruining everyday lives for the average person in Great Britain, is ruining lives, raising taxes, taking money away from the poor, and so on. And the Conservatives are roasting the Labour Party. But the Conservatives did the exact same thing when they were in power. The Green Party will do the exact same thing. So will Reform. Nigel Farage is an absolute moron. He should not be leading any party. To be fairly honest, there is nobody great in British politics right now. Not a single person you could point to in British politics and go, that person is truthful. I'm sorry, there's just no one you could point that finger to. Every single one of them is liars, head to toe. They can't tell one word of the truth. It's just not within them. They're politicians. They're born to lie, full stop, and steal. In daylight. But essentially, that is essentially what's happening in British politics. You know, the Americans at least have an outsider. Donald Trump. He's an outsider. He's not a politician. He's a businessman. Sure, he's making money for himself and for his family. No doubt about it. But at least he's giving the people something too. And even across the pond. I'm not even American. And I'm feeling in the benefits of Donald Trump by his crypto policies. Other way around, the UK, who's it really helping? Nobody. Who's any country helping? Nobody. Just themselves. But the UK is becoming unbearable to live in. It's more than here. So that's what's happening in UK politics today. If essentially, So that's all my thoughts are, Ronnie, regarding British politics. Yeah, we write big stuff. Yeah, all right, USD all the way. Even Miles of CMF, Manny, good to see you how you do it. Miles, 2 questions. When the Clarity Act gets approved, how long will it take to be implemented? And there are more XRP ETFs pending. Yes, there are more XRP ETFs pending. And regarding the Clarity Act, we'll get so once it's fully voted on, it'll take about a week for Trump to sign it into law. Give it about a month to mature, a month or 2 to mature, and then we're good to go pretty much from there. Hi, Miles of CMF. Peg, good to see you how you doing. How does USDT make money from fees? USDT makes money from fees. Yes, Miles, how you doing? All right. How is your day been, Miles and CMF? It's been good, Lena. How's your day been? Even Miles and Crypto Peeps, good to see you, Semper. How you doing? Hi, Miles and CMF. How you doing? Doing great, Carlos. Good to see you as well. When can we now expect to see 50 XLPs in quarter 1, 2025? Realistically, a few things happen. Those few things happen, we're good to go. 2026, I meant, sorry. Yeah. Politicians equals salesmen in the US. 43 tax increases for the UK. Yeah, there are 43 tax increases in the UK. It's ridiculous. It's absolutely ridiculous. Now, and they're wondering why millionaires, billionaires, and ordinary people are leaving the UK. They're very surprised about that. Is the funny part. Revolutionary Bitcoin ETF expansions is what we're going to talk about next on tonight's live. The Nasdaq pushes for 400% options limit increase. The cryptocurrency world is buzzing right now with excitement as the Nasdaq, essentially ISE, takes a bold step to revolutionize Bitcoin ETF trading. That's also helped the market today to get some sort of fireworks happening. In a groundbreaking move that could significantly impact market dynamics, the exchange has requested permission to essentially dramatically increase options contracts limits for BlackRock spot Bitcoin ETF IBIT. This development represents a major milestone for institutional cryptocurrency adoption and could open new doors for sophisticated trading strategies. This basically shows that Nasdaq sees, huge opportunities in Bitcoin and in cryptocurrencies going forward, which gives a little bit of a spark towards the crypto sector, which also made the prices jump slightly today. The Nasdaq ISE filing with the SEC reveals compelling reasons behind the proposed changes. The exchange essentially wants to boost the options contract limit from 250,000 to 1 million contracts, representing a massive, essentially 400% increase. This ambitious request stems from 2 key factors that demonstrate the growing maturity of cryptocurrency markets. Exceptional liquidity levels in IBIT trading skyrocketing institutional investors and participation, strong market demand for sophisticated hedging instruments, and proven track record of stable ETF performance. The proposed changes could transform how both retail and institutional investors approach Bitcoin ETF trading. By increasing contracts limits, Nasdaq aims to provide greater flexibility and enhance risk management capabilities. This Bitcoin ETF expansion would allow larger positions and more complex trading strategies, potentially attracting even more institutional capital into the cryptocurrency space. Another crucial aspect of the Nasdaq's proposal involves removing limits on physical settled flex IBIT options. This change would provide unprecedented flexibility for institutions, investors seeking also customized exposure to Bitcoin through this popular Bitcoin ETF. The elimination of these essential restrictions could enable more tailored investment strategies and facilitate larger institutional positions, improve overall market efficiency, and create new arbitrary opportunities. The SEC so far has opened the proposal for public comment, marking essentially a critical phase in the regulatory process. And market participants now have the opportunity to voice their opinions on these essentially significant changes to Bitcoin ETF trading rules. This is quite big news that the Nasdaq has taken so much interest in Bitcoin options contracts, going from a contract of 250,000 to roughly about 1 million such contracts now. This proposal essentially represents more than just a technical adjustment. It signals the continuing evolution of cryptocurrency markets towards mainstream financial integration. The growing institutional interest in Bitcoin ETF essentially products demonstrates increasing confidence in digital assets. As legitimate investment vehicles, as regulatory frameworks mature and market infrastructure improves, we can expect to see more sophisticated financial products built around the cryptocurrency exposure. So, the Nasdaq has just shown the world essentially that they see a future in Bitcoin. They're essentially expanding the contracts from 250,000 contracts to around 1 million contracts, which is a big push, which also essentially helped Bitcoin and the rest of the cryptocurrency space to spice up a little bit today, essentially to go up a little bit. Now, this one is essentially interesting news from strategy, which we're going to go through next on tonight's live. Strategy has decided to become transparent. Before we talk about strategy becoming transparent, let's go inside the comment section first. This was happening there, and go straight into the next news. Hi, Miles and family. Good to see you, Alex. How you doing? We need Jerome Powell gone, and I don't care who takes over. I just want to hear. I agree 100%. I mean, Trump said he's already chosen who's going to be essentially replacing Jerome Powell already. Morning, Miles and CMF. Shelly, good to see you all morning. How you doing? How you been? What up, Miles and CMF? Happy Friday. Happy Friday. It's Wednesday. I mean, happy Wednesday. That makes sense. Good to see you as well, Ray. How you doing, brother? How you been? Hi, Miles and CMF. Good to see you as well, Kai. How you doing? Now, strategy. Strategy launches credit rating dashboard to address investor debt concerns. So, as you all may know, that JP Morgan is trying to squeeze the life out of MSTR stocks by betting against them and trying to short them. Strategy decided, out of all days today, to come out and say that they're not going to default on their payments in any sort of a way. And if anybody's worried about MicroStrategy or essentially strategy going under, it's just not going to happen. So here is what strategies rolled out today to boost confidence inside the market space. Strategy rolled out a new credit rating system dashboard today to address growing investor concerns about the company's balance sheets. The world's largest corporate Bitcoin holder claims it can service debt payments for 70 years, even if Bitcoin prices remain flat. According to Cointelegraph, the dashboard shows the company maintains a 5.9 essentially X assets to convertible debt ratio at their 74,000 average cost basis. The announcement comes as digital asset treasury stocks experienced sharp declines during the Bitcoin market downtrend that we had. Bitcoin essentially ratio would stand at essentially 2x. The company emphasized that it's essentially divided runway and enterprise software cash flow as protection against liquidation essentially risk scenarios. The credit rating tool addresses widespread fears that falling crypto prices could force major treasury companies into liquidation. This selling pressure would further weaken an already essentially distressed market. Lacey Zhang, research analyst at BitGet Wallet, told Cointelegraph that Strategy's 71-year essentially dividend runway claim appears realistic under a Bitcoin essentially price scenario. However, she noted that the long-term projection depended on market volatility and regulatory changes. Strategy's market net asset value stood at 1.16 at the time of the report. And essentially, an MNAV below 1 makes it difficult for companies to raise funds through their share issuance. This would limit future cryptocurrency purchases. We reported that digital asset treasuries companies have faced severe NAV compressions, with essentially 25% of their firms showing below their Bitcoin holdings value as of September 2025. Strategy's financial position may influence Bitcoin's price floors during future downturns. The essentially CEO of Crypto Quant stated that Strategy's strong financials provides a positive signal for the next bear market. The company is unlikely to sell its holdings, potentially preventing Bitcoin from ever revisiting its realized price of $56,000. According to what Strategy is trying to do and the transparency they're trying to show, essentially, we could never see Bitcoin dropping anywhere around $55,000 or $56,000. It's just never going to happen. But the day Strategy decides to sell Bitcoin, expect that day to go below 50,000. The digital asset treasury sector has grown to more than 200 companies since Strategy essentially pioneered the model in 2020. According to essentially CoinGecko, these firms deployed $42.7 billion in 2025 alone. Strategy approximately holds $70.7 billion in Bitcoin, representing nearly 50% of all treasury company holdings. Several lending, essentially leading treasury companies, suffered recent stock declines. Alongside falling from the MNAV ratios, companies like essentially Bitmain, Metaplanet, SharpLink Gaming, and Upsy essentially are all experiencing drops. The only company that survived during this essentially market downtrend that we had, and it was a Bitcoin essentially public company holder, was Strategy. The rest of the Bitcoin public company holders around the world suffered majorly. Some analysts remain skeptical about the Treasury company's model sustainability. Jim, for example, previously closed his short positions on strategy at a profit after predicting premium compression. The model depends on essentially maintaining share prices and premiums above Bitcoin holdings to avoid dilution. So, essentially, strategy is trying to show transparency to the world, saying that if Bitcoin essentially stays stable, we will be able to pay dividends up to 71 years, no problem whatsoever, month on month. However, if Bitcoin goes below that, all hell will break loose. But for the time being, strategies for once in their life showing essentially transparency, which is something Tether still struggles with. Now, Grayscale is what we're going to talk about next on tonight's slide. So moving off essentially strategy and their transparency today to Grayscale. Grayscale done something interesting. They've decided to launch the first ever Zcash ETF. Grayscale has taken a major step towards bringing essentially Zcash, a top privacy-focused cryptocurrency, into the mainstream financial system. It's an interesting play because Zcash is pretty much a replica of Monero, which is a privacy token, which is banned to be purchased in the EU on crypto exchanges. Will also be banned in other jurisdictions around the world because they're not very fond of privacy tokens because they're difficult to track and mostly used for illicit activities. So it's an interesting play that Grayscale decided to create an ETF for a privacy token. Not saying it's a bad thing, why not? Because a lot of people that are holding Zcash could make a lot of money if this plans out essentially pretty well for them. Grayscale has taken a major step towards bringing Zcash, a top privacy-focused cryptocurrency, into the mainstream financial system. The asset manager aims to convert its existing Grayscale Zcash Trust into a spot Zcash ETF. This was essentially disclosed in a recent S3 registration statement filed with the US SEC. Grayscale chose the S3 form because it allows faster and easier conversions than a standard ETF registration. However, if essentially approved, only experienced issuers with solid reporting histories can use it. And Grayscale meets all the requirements. This move also builds on Grayscale's past achievements. In 2024, the company successfully converted both its Ethereum and Bitcoin essentially trusts into ETFs. These early transitions set a strong precedent, both technically and regulatory, essentially for Zcash products. The new filing includes a recent, essentially for 19b4 rule change, which would allow the ETF to list and trade on the New York Essential Stock Exchange. The planned ETF would follow the common structure used by US spot crypto ETFs. It will hold actual Zcash and track the CoinDesk, essentially Zcash price index. At the same time, it also allows an in-kind share creation or redemption through baskets of Zcash and charging a 2.5% annual sponsor fee. Today, the trust holds roughly $150 million worth of Zcash, and these assets would move into the ETF once the conversion is completed. And trading on major exchanges like the New York Stock Exchange, ACRA, would make the fund far more accessible to investors across multiple regions. Meanwhile, Zcash has gained a strong attention in recent months. The Resilience Group recently moved all its crypto investments into this token, showing increasing interest in the markets. And the demand is showing in its price. Zcash is now trading around $505, up essentially 0.56% in the last 24 hours. Regarding Zcash's essentially future structure, it's doing pretty well for itself. Some are even naming Zcash the new Bitcoin, is what the rumor that was going around. They're naming Zcash the new Bitcoin because of the actual privacy it brings towards the table. But the idea of a privacy token getting turned into an ETF just makes no sense due to what's the point? Because the whole point is privacy when you go for Zcash. If you go for a Zcash ETF, well, there's no privacy there, is it? But if anybody wants to go for a Zcash ETF, it helps in the long term on price action on Zcash itself because they're holding actual Zcash to back the ETF. Now, moving on from Zcash Grayscale ETF, which is a very interesting play, to, because it defeats the whole purpose of a privacy coin, to revolutionary AI startups. So just going back to the topic of essentially AI bubble burst, because it's a major play, and if it does essentially have some sort of, if there is some sort of an AI bubble burst, the repercussions, as I said previously, could be drastic. And the numbers are in terms of an AI, essentially US. So far, the US has invested into 49 US companies. There are 49 AI US startup companies that have secured over $100 million plus funding. The artificial intelligence revolution is absolutely accelerating at an unprecedented pace in the US, with 2025 proving to be a landmark year for AI startups, securing massive funding rounds. As we approach the final month of the year, the United States has already matched 2024 impressive tally of companies raising $100 million or more, signaling a robust investor confidence in the AI sector. So still, Michael Burry is betting against the AI bubble burst, whereas AI startup companies are getting funded left, right, and center. The surge in venture capital flowing into artificial intelligence companies reflects the transformative potential investors see in this technology. From healthcare AI to enterprise solutions, AI startups, or solving complex problems across industries, driving unprecedented funding rounds that are essentially reshaping the technological landscape. November witnessed some of the most substantial investments in AI startups this year. For example, the creators of viral coding platform Cursor raised an astonishing $2.3 billion in funding rounds that valued the company at $29.3 billion. This represents the company's second major funding round in 2025 alone. Other notable November deals include Parallel secured $100 million in Series A roundings for their AI agent infrastructure. Hypnagogic AI also raised $126 million. C for Healthcare Applications Fireworks AI collected $250 million. But Michael Saylor is still betting against the AI America and expects an AI bubble burst. But the fundings are still coming in. By the looks of it, Michael Burry might be getting squeezed out of his short position. Now, moving off essentially the 45 AI companies so far that have been funded by the United States to Binance. Binance is about to introduce a very, very unique feature that is something we've talked about inside the crypto space that you could potentially see coming down the road, where more established crypto companies or institutions start offering services. And that's the same services you might be getting from crypto influencers, you could get it from established institutions or massive or behemoth crypto companies. So, for example, Binance is launching a concierge crypto service for wealth managers and family offices. Binance has launched a concierge-style service designed for family offices, asset managers, and private funds, taking their first steps into the crypto space. According to the exchange, today, the new service offers personalized onboarding with dedicated managers, support for over 100 fiat currencies, and access to tailored structured products. This service also includes credit lines, institutional-grade custody through partnered custodians, and real-time analytics and reporting tools designed to give professional investors a clear visibility into their portfolios. Bain said that the new product is essentially a response to affluent investors in traditional finance who are entering crypto markets and are unsure of how to navigate the space effectively. While other crypto exchanges such as Coinbase and Kraken offer platforms aimed at institutions, Binance's real competition for its latest product comes from wealth managers like Morgan Stanley and crypto custodians, including Fidelity Digital Assets and subsidiaries of Fidelity Investments. Whereas Coinbase and Kraken are going head-to-head to each other, and Crypto.com, Binance decided to go head-to-head with the behemoths in the institutional sector by offering the same services they do. Fidelity's crypto arm offers audited custody controls and integrated trading platforms for institutions and high net worth clients exploring digital assets. JP Morgan, for example, filed to the SEC to issue an auto-callable accelerated barrier notes linked to BlackRock's iShares Bitcoin Trust, which we talked about yesterday, which is an interesting offer that JP Morgan is going through with. Retailers also reported that the family offices and wealthy investors in Hong Kong, mainland China, and Singapore were increasing their digital asset exposures, with many planning to allocate around 5% of their portfolios to crypto. Jason Hong, the founder of Next Gen Digital Ventures, said he raised more than $100 million in a few months for a new long, short crypto equity fund launched in Singapore. And Binance's new feature is just another indication that institutions and high net worth individuals are genuinely the next clientele entering the crypto space. The crypto space is moving at a much more faster rate and shifting over from retail's hands to institutions' hands. And we're shifting away from that whole narrative of essentially the retail section is essentially leading the crypto space and so on. And we are genuinely moving to the narrative of the institutions are going to be the one leading the way, which was always going to be happening. The idea of a fully decentralized world was never possible. Decentralization with elements of centralizations is what is always going to be happening. And the very same people that the crypto space hated, which was the institutions and the big banks, are the exact same people that are going to be funding us with liquidity. So we don't hate them that much. To be fair, I've never hated them. I love the money that comes in from institutions and banks. Keep them coming. Now, moving on from essentially what Binance is going to be offering to revolutionary token platform launches. Securities expands to EU with Avalanche integration. AVAX and Securities coming together is a big play. Big play for AVAX. Big play for crypto. Adds indirect value to the crypto space as well. The cryptocurrency world just witnessed a groundbreaking development that could reshape digital asset trading across continents. Securities, a leading digital asset securities firm, has announced the launch of its revolutionary token platform on AVAX after securing crucial EU regulatory approval. The street move positions the company as a licensed security token operator in both the European and American markets simultaneously. The new token platform represents a major leap forward in blockchain adoption. By essentially obtaining an EU licensing, Securities can now operate the security token platform across 24/7 member states. This expansion comes at a perfect time when institutional interest is at the highest level. Choosing AVAX as the underlying blockchain was a strict decision. AVAX's high throughput and low transaction cost make it ideal for security token operations. Moreover, the platform's sub-second finality essentially ensures that trades settle quickly and securely. This combination of regulatory compliance and technical excellence creates a powerful foundation for new token platforms. This token platform addresses one of the biggest challenges in digital assets: regulatory uncertainty. With proper licensing in place, institutional investors can participate with confidence. The platform compliance framework ensures that all transactions meet both the EU and US regulatory standards. Therefore, users can trust their investments operate within legal boundaries. Building a compliant token platform across multiple jurisdictions presents significant hurdles. Securities have to navigate complex regulatory landscapes in both the EU and the US, and the company successfully addressed these concerns about their investor protections and anti-money laundering protocols and securities laws. Their achievement demonstrates that regulatory compliance and blockchain innovation can coexist. And the integration with AVAX's ecosystem provides technical advantages that traditional systems cannot match. The token platform leverages AVAX's subnet architecture to create isolated environments for different asset classes. This approach ensures that regulatory requirements of various security types can be met without compressing performances. AVAX is a brilliant project, and I'll say it again, as I've always said, it is a brilliant project. And this is amazing news coming from Securities and AVAX. I've said this also a long time ago that I think personally AVAX is a better project than Solana by a mile. I'm not saying that because I'm holding a bag of AVAX in any sort of a way, because I'm not. I'm very honest. I'm not holding a massive bag in any sort of a way. But AVAX is a better, essentially, Solana. Now, moving on essentially from AVAX's major news to JP Morgan. What JP Morgan has said today also weighed in and played a role on the markets going on the upside. But before we talk about JP Morgan, let's go to the comment section first. As I said previously, this is live, which means if you do have any questions or comments, put it down in the comment section. More than happy to help you out. So let's go through the comment section first, and then we'll go straight through the JP Morgan news, which is extremely bullish. Hi, Miles here. Can't you see how you're doing? Hello, Miles. What do you think is XRP need to break out? Can we see something positive in the early 2026? Tired of people laughing at us. If anybody is laughing at you for holding XRP, well, I've said this and I'll say it again. I always have the last laugh. I've always had the last laugh. And I'm not saying that because I'm cocky in any sort of a way, but I'm basing essentially, me always on the last lap because I position myself quite well by holding an asset that has the correct licensing, has the correct regulation. The regulations can be paying a favor for it. Essentially, it's doing acquisitions. And yesterday we talked about Ripple's footsteps as well, and what Ripple can achieve and others can't. Where other crypto projects, for example, if anybody is laughing at you for holding XRP, let me just make one thing very clear. If you are holding XRP and people are laughing at you, let me just make one thing very clear. Other crypto projects inside the crypto space have to wait to be integrated, to be used by other institutions or other banks, if they get used in any sort of a way. Whereas Ripple can expand into essentially the financial sector because it's a private company. As I said yesterday, Ripple can apply for certain licensings that who's Bitcoin going to apply? Which part of Ethereum Foundation is going to be applying for a bank controlled license? None of them. Is Solana Foundation going to be able to apply for a license? No. Is Solana Foundation going to make an acquisition and buy a billion-dollar corporation to expand inside the financial sector? No, because it's foundation. Can essentially, any other crypto project achieve what Ripple is trying to do? No. Ripple can help and expand the XRP ledger and integrate it into the financial sector. Whereas other crypto projects cannot because there's no private company behind them. It's just foundations and a bunch of developers. Sure, developers add so much value to any blockchain. Developers add value to Bitcoin's blockchain, to Ethereum's blockchain, to Solana's blockchain, to the XRP ledger, to AVAX's blockchain, to HBAR's blockchain, to XLM's blockchain. No doubt about it. Developers do so much for the crypto space. But again, Ripple can do things that essentially other blockchain projects cannot, which is apply for a bank charter license, apply for essentially Fed accounts, apply to get a license in Singapore to expand the XRP ledger, apply to get a license in Bahrain, apply to get a license in Qatar, the UAE, the United Kingdom, the EU, and Luxembourg. Other crypto projects cannot do that unless they get approved. Whereas Ripple can take steps, projects cannot. So if anybody is genuinely laughing at you for being in XRP ledger or for being in Ripple, we're not even on the same level for them to be laughing at you. Honestly, if you're holding XRP and they're holding something else, you're not even on the same levels for them to be laughing at you because you're here and they're there. They have to be integrated to be used, whereas Ripple can take steps forward to be integrated. So other crypto projects are waiting in line and going, look at me, please use me. Whereas Ripple is going forward and taking steps and expanding the XRP ledger and trying every single possible way to integrate it inside the financial sector by applying for those licensings. Whereas the other crypto projects are going, look at me, please choose me, please integrate me into your systems, because they can't take the same footsteps as Ripple can. So if anybody is laughing at you for holding XRP, you're not on the same levels. So let them laugh at you because they're all morons. I hope that helps. And regarding a near breakout, we're very close to it. Why is it very profitable to sell old crypto wallets through? Hello, Miles and CMF members. I hope that you had a good day. Scott, good to see you as well. How you doing? How you been? But genuinely, if anybody is laughing at you, you're not even on the same level. Honestly, they are not on the same level as you. Other crypto projects have to wait in line to get integrated. Ripple just takes footsteps forward and gets the XRP ledger integrated. Ripple doesn't wait in lines. Other crypto projects have to wait in line. Always remember that. Ripple wanted to get its XRP ledger or its Ripple payments used by banks. Went to the bigger banks. The SEC sued them instead. What did Ripple do? Go and get licensings. Ripple wanted its XRP ledger or its Ripple payments to be used by banks. Couldn't get it. What did they do? Essentially apply for a Fed master account. But other crypto projects can't do that. So we're not even on the same level for them to be laughing at you holding XRP. Now, they have to wait in line. JP Morgan declares cryptocurrencies as tradable macro asset classes. JP Morgan has officially recognized cryptocurrencies as tradable macro asset classes, indicating a significant shift towards institutional liquidity dominating the markets. That's a big announcement from JP Morgan. Huge announcement from JP Morgan, which also boosted the crypto market space today as well. So the transition essentially marks a reduction in retail speculation, with institutional investors like JP Morgan and saying essentially stabilizing cash flows and impacting pricing dynamics and highlighting a structural change in crypto market landscapes. JP Morgan has advanced its stance on digital currencies, citing a transition into a macro asset class supported by institutional liquidity. Retail speculation is swiftly being replaced as the market restructure its financial underpinnings. Nicholas, the JP Morgan essentially analyst that everybody knows, a leading voice within JP Morgan, articulated the long-term implications this shift entails essentially for the sector. Market stability is anticipated from the institutional flows, which now primarily fuel value anchoring. A notable statement from essentially Nicholas on LinkedIn categorized this as a multi-year structural adjustment, rather than a cynical essentially change. Meanwhile, retail engagement wanes and constraining liquidity into institutional channels, which could mitigate traditional volatility patterns. The new era of crypto as a retail-driven speculative asset is fading. Institutional participation is now the dominant force stabilizing cash flows and anchoring long-term price discovery. This is not a retail rally. It's a macro liquidity regime shift. Industry leaders such as Raoul Pal and Arthur Hayes endorsed JP Morgan's viewpoint, recognizing the macroeconomic essential aspects as a pivotal essential moment to this revolution. Powell remarked on Twitter that this marks the next phase of growth, driven by macro liquidity, suggesting a profound impact on price discovery mechanisms. JP Morgan's recognition of cryptocurrencies as a essentially macro asset class aligns with the 2000s institutionalization trend, from commodities emphasizing the long-term streak of alignment seen now in digital assets. Research suggests that the alignments with economically stable industries could advance financial stability and appeal to institutional investors. This shift entails a broader acceptance of cryptocurrencies within regulated frameworks, potentially leading to increased mainstream adoption and technological innovation in financial services. JP Morgan, a behemoth in the banking sector, today recognizes crypto. That's big news, which is also why the crypto market slightly jumped in price today, because JP Morgan doesn't recognize the crypto space no longer as speculative, but as macro assets. It's a good step. Now, on the topic of JP Morgan recognizing the crypto space today, and also on a topic that we talked about regarding essentially JP Morgan, essentially on Ripple. Before we talk about Ripple news, let's go start a conversation first. Let's see what's happening there and then go straight into the Ripple news. By the way, if you liked and essentially smashed the like buttons or smashed the retweet buttons of this live show, honestly, thank you so much. If you're watching this on YouTube and you've also liked the essential live show as well, thank you so much as well. If you haven't, smash the like buttons and smash the retweet buttons. And put a comment outside the live. Now, Ripple. The big news. Ripple signals a rapid expansion with XRP and USD to essentially set to boost institutional collateral. So with all this topic of essentially institutions are the next wave, high essentially investors are the next investors enter the market space. Ripple has seen accelerating institutional growth, with XRP and USD set to be deployed as collateral for professional clients as demand for crypto-driven liquidity expands across global markets. The company is now positioning these assets to support broader assets to multi-asset trading and clearing. Reese Merrick, the Senior Executive Officer and Managing Director of Middle East and Africa at Ripple, shared essentially a point of view. He said, last month, Ripple completed the acquisition of Hidden Road, now named Ripple Prime, who serves 300 institutional customers, clearing $3 trillion across all markets annually, and noting that Ripple is now the first crypto-native company to own a global multi-asset prime broker. On the topic of essentially Ripple can achieve things other blockchain projects cannot and have to wait in line to be accepted, whereas Ripple just takes another footstep forward. We have already seen significant growth since the announcement, and XRP and RLUSD will be used as collateral for institutions. Just want to mention that one more time for the people at the back, because some people still may assume that Ripple, till this day, is not going to be using XRP. I don't know why, even after Brad saying that XRP is at the heart of what Ripple does, at the center of what Ripple does. Just to mention it again, this is Ripple's senior manager saying these exact words. We have already seen significant growth since the announcement of Ripple Prime, and XRP and RLUSD will be used as collateral for institutions and institutional clients. The institutional era just leveled up. His remarks highlighted Ripple's aim to deepen institutional engagement by expanding liquidity channels and collateral flexibility. Ripple completed its $1.25 billion acquisition of multi-asset broker, essentially prime broker Hidden Road, in October, rebranding it to Ripple Prime. This landmark deal makes Ripple the first crypto company to own a global prime broker. Hidden Road provides the clearing, financing, and brokerage across traditional and digital assets for more than 300 institutions, and the business has already tripled in size since the transaction closed. The move blends, just to mention again, Hidden Road has tripled in size since the announcement of Ripple's acquisition. The move blends traditional finance with crypto infrastructure, supporting RLUSD's growing role as collateral for prime products. The platform is positioned to streamline institutional trading by leveraging the XRP ledger for efficient on-chain settlements and responding to rising demands for compliant and sophisticated digital asset tools. So, alongside Coinbase, Crypto.com, Kraken, Binance, and BNY Mellon, Franklin Templeton, Fidelity, Standard Chartered Bank, JP Morgan, all of these major banks, all of these major institutions, all of these major crypto exchanges, every single one of them is lining up for an institutional takeover for next year, pretty much, Q1 beginning. Every single one of these institutions, banks, and crypto exchanges are lining up. They're creating tailored products for institutions entering the crypto space Q1 2026. And you know who else is creating that tailored movement? Ripple, alongside the banks, the institutions, and the crypto exchanges. But the rest of crypto projects can't do the same thing. So this is why I say, honestly, Ripple is in a different level. It's in a different category. It just cannot be compared to any other crypto project out there. XRP cannot be compared to any other crypto project out there. Because alongside the banks, institutions, and the crypto exchanges, Ripple is exactly doing the exact same things, tailoring packages for the next clientele. Is Solana doing that? No. Is Ethereum? No. Bitcoin? No. AVAX? No. HBAR? No. XLR? No. XDC? No. Not saying any of those are bad projects either way, because they are great projects. But what I am trying to say is they can't do the same thing Ripple is doing. On that note, we have also reached the endings of tonight's live. Also, just want to add one more thing. A senior, essentially from Ripple, today talked about how the UK is getting ready to approve stablecoins, and that a token like RLUSD is going to be used locally in the United Kingdom. Just want to give you that one as well. So RLUSD, very soon going to be a local token used in the United Kingdom. On that note, we have reached the endings of tonight's live. This was episode 410 of the CMF live show. If you're watching this for the first time ever, CMF stands for Crypto Mouse Family. My name is Miles. You can tune this live Monday to Friday, 10 p.m. long time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. All the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And on tonight's live, essentially live show, we talked about Ripple's footsteps inside the financial sector and the steps they are taking that other institutions cannot. We talked about JP Morgan finally categorizing cryptocurrencies not as speculative but as macro assets. We also went through news on tonight's live regarding securities and expanding essentially with AVAX, which is brilliant. We talked about on tonight's live also regarding Binance catering to the institutional clientele entering the crypto space. We talked about also regarding the AI startups, about 49 US companies, AI startups, funded over $100 million plus each. We also went for news on tonight's live regarding Zcash and Grayscale ETF coming out. We talked about tonight's live also regarding the matters of strategy and their new payments, actually their new transparent system. We went for news on tonight's live also regarding Bitcoin ETF expansions on the Nasdaq, 250,000 contracts to over 1 million. We also went through news on tonight's live regarding Tether and gold and Tether's rating from the S&P Global and essentially the December rate cut situation. So this was the CMF live show. Stands for Crypto Miles family. My name is Miles. Before we do go, obviously, let's go start the comment section and then we'll call it a night. Let's see where we're at. Thanks, Miles, for what you do for us daily. Your thoughts helps me tremendously. Scott, thank you so much for the kind words, brother. Let's go, Miles. Let's go, Scott. Miles encourages us to never share the total bag of crypto that we actually own. So, hypothetically speaking, what do you think is a good goal to have for XRP as a retail investor? Anything you can afford, honestly, to be fairly honest. You could hold 1,000 XRP, 10,000 XRP, 100,000 XRP, whatever you may hold. It could genuinely change people's lives, not financial advice whatsoever. Miles, XRP, XDC, XLMH4, and hot. Let's go, Scott. Did Russia ever finish their mega Bitcoin farm you spoke about last year? Not much news about that since they talked about it last year. Let's go, CMF and XRP. Let's go, Scott. Always enjoy watching your live shows. Thanks, Miles. Have a great night and see you tomorrow, same time. Artistic, see you tomorrow, same time as usual as well. Night, Miles and CMF. Pablo, let's go see you tomorrow, same time as usual. Good night, Miles and all the CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, same time as usual. Congratulations on program 410. I'm an OG of the CMF. Let's go, Miles. Let's go, Scott. Thanks, Miles. Have a great evening. You too, Mickey. See you tomorrow, brother, same time as usual. Sandra Bay, Sardinia baby, I can't wait. Thanks, brother Miles. Have a good night. Let's go, Comatose. See you tomorrow, same time as usual. Night, Miles and CMF. Have a great evening. Let's go, Joe. See you tomorrow, same time as usual. Another great program. Let's go, Scott. Take care, Miles and CMF. Ray, let's go. See you tomorrow, same time as usual. Thank you again, Miles and CMF. Have a good night. All Carl. We'll see you tomorrow. Carl, see you tomorrow, same time as usual as well. Miles, great night as ever. See you again tomorrow. Thank you very much and good night to you all and CMF. Let's go, Addy. See you tomorrow. Good night, Miles, and thank you. Have a great night, Mike. Let's go see you tomorrow, same time as usual, brother. Thank you so much for update, Miles. Sleep tight, all. Let's go, Lena. I just caught the end. Thanks, Miles, and good night, everyone. Let's go, Ghost Burner. Good to see you as well. How you doing, Ghost Burner? Good night, Miles. Thanks for everything. Let's go, Scott. See you tomorrow, same time as usual. Thanks, Miles. Let's go, Shelly. See you tomorrow, same time as usual as well. Good night, Miles. Funky brother. Let's go. See you tomorrow, same time as usual. Like, comment, share, subscribe, follow if you already haven't. If you have, thank you so much, and I'll see you everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you are around the world. Love you all. See you all tomorrow, same time as usual.